Hey guys, this is Izzy, and today I'll be going over the ICT Silver Bullet. As you guys may have watched the video or not, this is my take on it. I do use sessions highs and lows, as you guys may or may not know, and I have my own twist into how I see it and how I trade. But I did start a case study this last week. So last Friday was the first time I've traded it, and I made over $10,000. I made I believe like 3,000 was off of my personal strategy, which we're gonna go over at some point, and then I did take another trade, and I pyramid my positions, and with that I made the rest, which was about like 7,000. So this is the ICT Silver Bullet case study. And as you guys want to see my notes, I'm going to leave them over here. Take a screenshot, do whatever you want, because I'm going to reference them. These were the notes that I took from ICT himself. So the Silver Bullet is created between 10 o'clock and 11 o'clock. It is the last portion of the move that is going to unfold for the AM session. Okay, so what time does the AM session start? Is 8:30 to 11 o'clock, but it can go as far as noon. Okay, so what does that mean? It means that the stock market opens at 8:30, and we're looking for the setup that happens after 9:30, because 9:30 it's usually a drawn liquidity that we're looking for, and the silver bullet happens apparently between 9:50 and 10:10. That is the micro. That 20-minute period, you're going to see a price run that begins on those 20-minute spans. Okay, so your entries should be on those 20 minutes. Okay, there is a second macro that starts at 10:50 to 11:10, but we are not using that one. We are using the macro of 9:50 and 10:10 a.m. Okay, so what are we looking for? A pool of liquidity that has not been tapped into. We should only look to make 50 points with it. All right, so step-by-step model: trade between 10 o'clock and 11 o'clock, identify liquidity, find a fair value gap, and it has to be opposing, meaning the fair value gap needs to be opposite from where you expect liquidity to be drawn to. All right, so we're gonna go over this, and I'll try to simplify as much as I can. Okay, so like I said, my sessions highs and lows work on the following way. I use sessions highs and lows as liquidity. Okay, so this was the trade that I was taking in the morning. I saw a fair value gap. I saw price trade into it, and we started creating a bearish order flow, and I was just stacking positions. Of course, we had a market structure shift and an SMT with NAS and SPX. Okay, so at 9:30 we had the drawn liquidity all the way down to a previous I think this was a new day opening gap that I had marked from previous weeks, and it was also Asian low. So that was my liquidity pool. So I was targeting Asian low. Price came and just took that. So I identified my liquidity, which was Asian low, and it says to the macro starts at 9:50. So between this candle and is it 10:10? is when we should look for our entry. Okay, so we saw there was a drawn liquidity right here. And find a fair value gap. We could have used this one. However, I was more interested on the gap that we formed at that specific point. So that to me could have replaced the fair value gap. That it has to be the opposing, I mean the fair value gap needs to be opposed from where we expect liquidity. So if liquidity got taken by sell side, we're expecting price to do a really quick displacement to the upside, which it did. So when we created this gap, this can be considered our entry. So I marked my gap, which is the blue, as you can see. It is a lack in volume, so I waited for price to tap back into it. And even though ICT only recommends taking 50 points, I wrote this down to my external sell side liquidity, which it gave me 235 points. And he does recommend always that your stop loss should be between 40 to 50 handle. 40 to 50 points. If we're trying to reduce our risk, which we can, honestly, for a more aggressive stop loss, we can only use 22 points, which is above the gap. But if you want to be a little bit more lenient, you can do above the previous high right here, which is 40. So that would be what ICT recommends, because price could come and tap into the top of the gap or go a little bit above it. So, but if you want to be really strict with it, you can absolutely do 22 points. So that trade was at 22 points to 235 points take profit. So the way that I look for external liquidity, it's simply looking left, guys. So I did see that we left this equal lows over here, and this was the previous retail support. So that wasn't in a daily trading range, so I was using this from the previous day, and I believe this was the previous daily low as well, which is very relevant. As you know, the algorithm is always trying to come back to certain price points, so that was definitely the price point that I was looking for. So pretty simple model, very specific, so you don't have to be waiting an hour, 2 hours for an entry. You have 20 minutes. That's it. You got to make a decision. And as soon as you know where the liquidity got taken, wait for a move the opposite way and wait for a fair value gap or any sort of gaps or imbalances to be formed. Wait for price to trade back into it and take your entry, and just write that. He does recommend to be out of the trade by 11 o'clock. But since we were trending, I just held my trade. So I hope you guys like this. Subscribe to the channel so you guys can actually see my other case studies. I'm going to continue to post about this, and we will see where this takes us. I will be doing live trading, so if you're interested in the Silver Bullet method, let me know in the comments, and have a great day.